Welcome. I'm Janine, part of the research team, presenting you with an investment pitch today to determine which of the multi-billion dollar companies, Premier Investments or KMD brands, we think you should invest in. Our objective is to provide you with the best possible chance of capital growth in the next 5 years. The executive team from BSB107 includes myself, Mitch, Josh, and Willow. We have worked collectively to analyse and produce you with informed investment opinion. KMD is composed of Kathmandu, a Bose Rip Curl. Kathmandu specialises in quality clothing and equipment for adventure. North American footwear empire Bose became part of the group in 2018. Rip Curl, an Australian surf brand, was acquired in 2019. Premier has been on the Australian Stock Exchange since '87 and was established to maximise growth and returns through the Australian retail market. Premier Investment owns the Just Group, composed of fast fashion brands and a stake in Breville. On the board of KMD Brands is Chairman David Kirk, a well-educated entrepreneur who has led 12 successful companies. The CEO is Michael Daly, who joined forces when KMD took a chance with acquiring Rip Curl a few years ago. On the board of Premier is the Chairman Solomon Liu, who has more than 50 years of experience and has succeeded in retail industry. The CEO, Richard Murray, excels in retail and finance. He was the driving force of JB Hi-Fi. Both companies share a space in the retail sector. KMD Brands primarily focuses on outdoor and lifestyle sustainability, whereas Premier focuses on fast fashion. KMD brand wants to inspire people to explore and love the outdoors by being a leading global family brand. Premier aims to maximize growth and capital returns by focusing on retailing, importing, and distributing. KMD strives to be the leading in environmental social governance, continuing building global brands, leveraging its operational excellence, and elevating its presence in the digital market. Premier's primary focus is developing their people, participating in community projects, and tightening their environmental responsibility. They are focused on ethical sourcing and work safety in the production plants in Bangladesh. I want to hand you over to Josh, my colleague.
Thank you, Janine. I'll be presenting Premier Investments' red flags and value drivers alongside their future growth scenarios and short-term expected growth rate. Premier Investments is an Australian-based retail brand, limiting their global consumer base and resulting in missed revenue from overseas markets. Rising inflation and interest rates have a high influence on consumer spending, reducing consumers' ability to buy non-essential products. The brand is experiencing management shortages as a key member of their management team is retiring. Another red flag is the consumer trend moving away from stationary products such as Smiggle, which make up 20% of their sales, and towards technological means of communication and learning. Additionally, Premier Investments has a high focus on fast fashion, therefore they lack the sustainability and quality of brands that are normally seen as favorable during economic downturns. The value drivers for Premier Investments include their strong management, despite a member of their management team leaving. Overall, a sizable portion of their management team have extensive experience in their respective fields, allowing them to maintain their current situation. The brand is financially stable. They have a stable net profit at 20% with a 6.5% net growth rate. This provides them with a lot of leeway in the event of a financial crisis, reducing their risk of collapse. They also have a high dividend yield of $1.25 at 5% per share. In the best case scenario of Premier Investments' future growth, they will experience a 20% annual revenue growth, allowing them to invest in overseas markets and expanding their global market presence. This scenario has a 30% probability. In a base case scenario, Premier Investments has a growth rate of 15%. They can focus on product sustainability and cater to the changing consumer needs. This scenario has a 60% probability of occurring. In the worst case scenario, Premier Investments has a low growth rate of 3%, caused by economic recession and change in consumer needs towards technological and sustainable products. This scenario has a 10% probability. In the base case scenario, Premier Investments sustains a steady growth rate of 15%, driven by their high turnover rate of products, financially stable business model, and consistent management structure. They can adjust their brands according to market needs and optimize products to meet current consumer trends. Lastly, Premier Investments has a short-term expected growth rate of 15.3% for its stock price. This indicates a potential increase in value driven by positive market sentiment. Investors seeking quick returns may find Premier Investments stock attractive in the short term. To conclude, Perimeter Investments faces red flags such as limited customer base, inflation, and interest rates, as well as changing consumer trends. However, their value drivers include their strong management structure, high financial stability and growth, and high profitability and dividend yield. In the initial perception, this company shows promise for investment. However, because of their high volatility in terms of their future market, they are a high-risk investment.
Thank you, Joshua. I'm Mitchell, and I'll be discussing KMD Brand's red flags, value drivers, future growth scenarios, and short-term expected growth rate. KMD Brands operates in the activewear clothing market, exposing them to negative impacts from high global inflation. Rising inflation increases the cost of raw materials and manufacturing, leading to higher prices for consumers and decreased demand for activewear. High interest rates can also limit their ability to invest in growth or pay dividends. Another red flag is the high competition in the activewear industry, especially in Australia. This can result in lower profit margins and increased expenses, leading to a decrease in the company's stock price. Additionally, KMD Brands has a low net profit margin of 3.7% in fiscal year 2022, indicating struggles with cost control and sales growth. Now, let's explore the value drivers for KMD Brands. As Australians prioritise health and physical activity, companies in the activewear market such as Kathmandu and Rip Curl stand to benefit. KMD Brands focused on producing high-quality, durable activewear has helped establish a loyal customer base. They are well positioned to see sustainable growth as consumers prioritise health and fitness. Kathmandu's strong customer base, brand recognition, and sustainable products gives them an edge over their competitors. Their focus on ethical and eco-friendly practices creates opportunities for expansion and growth. In the best case scenario, KMD Brands experiences remarkable growth with a 15% annual revenue increase. Their strong financial position enables them to invest in new product development, expand market presence, and capture a large customer base. This scenario has a 15% probability that we have calculated. In the base case scenario, KMD Brands maintains a steady growth rate of 8% per year. They sustain operations, gradually expand into new markets, and focus on cost management and operational efficiency. This scenario has a calculated 60% probability. In the worst case scenario, KMD Brands faces difficulties due to industry decline and economic downturn. They experience a negative growth rate of -2% annually, struggle to generate sufficient profits, and face the risk of downsizing operations. This scenario has a calculated 25% probability. In the base case scenario, KMD Brands sustains a steady 8% growth rate driven by customer loyalty, market expansion, and operational efficiency. They maintain a strong reputation, strategically enter new markets, and optimize their supply chain. This scenario positions them for success. Finally, KMD Brands has a short-term expected growth rate of 6.55% for its stock price. This indicates potential appreciation in value and positive market sentiment. Investors seeking quicker returns may find KMD Brands stock attractive. In summary, KMD Brands faces red flags such as inflation, competition, and low net profit margin. However, their value drivers include the growing activewear market, loyal customer base, and sustainable products. The company has 3 future growth scenarios that show promise when considering investment, and their short-term expected growth rate signals potential value appreciation.
Now, after analysing and comparing the two companies, we can now recommend the best investment choice. Of the two, Premier shows a current higher value with a market price of $25.05 per share versus KMD Brands sitting at $1.03 per share. Yet, despite KMD Brands having such a low current market value, using the internal and external influences on the retail industry at the moment, we were able to calculate each company's respective intrinsic values. Where their growth rate and its probability calculated this value, for KMD Brands, this was then $4.35, versus Premier Investments, whose intrinsic value was calculated at $21.14. From this, you can see that based off the intrinsic value, Premier, whilst it would be initially perceived as a better investment, is significantly overvalued as a company, meaning that it's predicted the share price will decrease over time. Their projection over the past few years appeared to have been increasing, yet with external influences and their red flags showing how high their current volatility is as a company, this poses risks to the investment. On the other hand, KMD Brands has been significantly undervalued given their current market price of $1.03 compared to the intrinsic value of $4.35. This company is then predicted to have a higher return on investment. It's also appealing to invest in their current market at such a low price per share, with the ability to almost quadruple your investment. With their sustainable business values, this appeals to the morals of the current consumers, and hence, with current economic trajectory, consumers are more likely to favour this versus something dispensable such as fast fashion. Where intrinsic value can be calculated through fundamental analysis of KMD Brands' value drivers, they already show growth potential after the acquisition of Rip Curl, showing determination to expand their market, and their leadership in being environmentally and ethically driven company. Overall, we highly recommend jumping at the chance to invest in KMD Brands as it offers superior return on investment, both short-term and long-term.